In the meantime, Goldman Sachs is out with a piece predicting that Apple is headed towards, quote, slowing overall revenue growth. Take a look at the stock, close to 150 today. Joining us this morning is the analyst behind the call, Rod Hall of Goldman Sachs. Rod, always good to get your thoughts. Good morning to you.
Yeah, morning to you, Carl. Good to hear from you.
You do say we estimate, and we have to estimate because of the metrics we get out of the company, COVID will drive a 22% ARPU increase from 2019 to 2021 that seems likely to reverse. I guess the question is, what's going to cause it to reverse other than is this just mean reversion or something else?
Yeah, we saw the ARPU running at about $273 in 2019, and that ARPU had been pretty flat, down a little, we think, over the years preceding COVID, but relatively flat. It's jumped up, like you said, by 22% to over $330. We predict anyway in 2021, and we would expect it to reverse back toward that level we saw in 2019, although not all the way back. So we think that because of work from home, study from home, all the remote things that people are doing, the value of Apple's products has gone up. So the ARPU ought to hang at a higher level. At least that's what our bottoms-up model is predicting right now. And then at the same time, you've got the user base growth slowing by Apple's own metrics that they've been giving out on iPhone installed base. You see about a 5% annual growth rate in that user base, and we think that growth is slowing toward GDP growth. So, you've got this user base growth that's slowing, and the ARPU looks like it'll probably reverse, and then I would guess remain roughly stable in years after this. So you kind of get this, combination of no growth.
You do seem very torn. On the one hand, you point to some of the demand pull forwards that COVID brought us. On the other hand, you do point out consumers have a lot of savings, balance sheets at the household level are strong, flexible work could potentially drive demand for hardware. It really does sound like you are truly neutral, even though that's a term we throw around a lot on the street.
Well, we do have a neutral rating on it, Carl, so there's that. But I think it's really difficult to predict what's going to happen here in COVID. And we're dealing with Delta. You guys are talking about all these puts and takes around the economy and various different companies. It's a very difficult period to predict. We found out the hard way last year when we predicted weaker demand, and then it turned out to be exactly the opposite. So I think the short term is very difficult to predict. I think the longer term, the next couple of years, 3 years, once we get through this, and we will get through it, is easier to predict. You can kind of see that this user base growth is slowing, and you see that ARPU is likely to stabilize at some level. And of course, none of us know what that is. We think it's down from this current level. We think that's a reasonable assumption to make, and our bottom-up model supports that. Consensus doesn't think that. Consensus thinks it's only down 2 or 3% from these current, what we consider to be inflated levels.